Hey guys, this is Randy. It's 2:23 Eastern Time as I'm starting this video, Tuesday, October 18th. And today's one of those do nothing, go nowhere days. I should clarify, the market is up, but since it gapped up this morning, it has literally gone nowhere. So I'll do a quick video, just some things I watch. This right side of the chart by nature is a swing trading and investing and trend trading site. Although personally, I do everything, and when the markets are slower, the opportunities there, I'll do some day trades. So I'm going to show you a couple things I'm watching on the intraday charts today. They could play out for those of you who are short-term traders, either a day trade into the close or possibly a position for a swing trade here, or a trade you plan to take home overnight if these charts play out. So let's go ahead and discuss what's happened so far today. Before the market opened this morning, I had pointed out, you can see today's gap. So we closed here yesterday down where this dotted line is, somewhere right there around 212.42. And I pointed out that 214.05 is where we're indicated to gap up towards that area. This was a resistance level. I pointed out all the reactions. Again, you can check that on the front page. So a pretty well-defined resistance level. And you can see this is a 60-minute chart. Just how well, I mean, as I do this video, we're trading at 214.06, and we've been there for the last couple hours. These are 60-minute candlesticks. So you can see, although we've moved up and below it, most of those candlesticks have closed right about that level. And then on the Qs, we're a little bit above the resistance level. I was highlighting this 118. You can even see, and I've had it on the chart here, I had a level above that, about 118.10, 118.09. So we've danced around that level, and again, we're just a hair above it, not enough to really say with any conviction that level's been taken out, especially due to the fact the SPY hasn't. So all I wanted to do here is really just drill down and take a look. The Qs are the leading index, so we'll look at those charts, and we're just going to drill down to the 1-minute charts, tell you what I'm watching. It's, as I always say, the stock market is just a collection of all it's a sum of its parts, which are the top holdings. And when you look at the leading index and NASDAQ 100, the top 10 stocks make up over half the returns of the index. So you really just follow those to get a good idea where the market's going. So we'll go through these charts real quick. These are all 1-minute charts. You can see the daybreak lines as I come down here. This was the close yesterday at 4 p.m. So there's your daybreak line. You can also see the gap. So there's yesterday's trades and a little bit of Friday's trades right there. Remember, Monday was a holiday, and the markets were open. Monday was the bond markets were closed. So this is Monday. There's Friday right there. So what's going on today? You can see there's this uptrend line on Apple. And the point here I'm going to drive home in this video is you watch all these support levels. If they all start to crack at once, we're probably going to head lower and maybe sell into the close. There's still an hour and a half left in trading. Anything can happen. The markets can certainly hold these levels and maybe rally up to the close, or we may close flat. But either way, these are some levels that could trigger a day trading op if you trade the NQ, the E-mini futures, QQQ, any of the leverage ETFs, whatever your preferred trading vehicle is. So here's a level on Apple. I have a horizontal support level again on the very short-term time frame, just this 1-minute chart. These are what a lot of day traders are watching. 117.86, that looks like support. Quite a few reactions to the left. This reaction high over here. You had this uptrend line, which has been broken and back tested and so far rolling over. So this would be, that's, if you want to call it sell signal number one on Apple, but again, the point I'm trying to drive home here, you have to look at all of these, at least these top 10. And if just one stock is doing well, breaks out bullishly on the intraday charts, or breaks down bearishly, that means nothing if the rest don't follow. If one stock breaks down and the other 9 out of the top 10 are sitting above support and look good, that's not going to take the Qs down with it. But if they all start to break these supports, and from my experience, that tends to happen around the same time, then that may trigger a quick short trade. I don't see a long setup here. It's possible. I haven't really drawn those lines. I'm making the case for a sell into the close, but there's a little triangle pattern, if you will. So back test, break of that 117.86 level, and then it looks pretty thin. Probably Apple would more than likely, I can tell you, would be minimum day trade target right down here. And that's around the 117.57 level. Doesn't sound like a lot, but if you day trade, you have no overnight risk, or I should say you don't have any overnight risk, to use proper English. Yeah, that's a 0.36% gain. Sounds like nothing, but when you day trade, you can use 5, 10 times or more a normal swing trade position. Again, because there's no overnight risk, you can tightly quantify your stops. You're not going to get gapped above during the trading session, especially on these large cap liquid stocks. And you don't face any overnight gaps because you're going to close before. And again, that's if you want to run that down to the close. If you want to put on a swing trade short here, again, looking at those 60-minute charts, market's at resistance. We're down below those primary uptrend lines on the daily chart, which is a recent sell signal. There's still some more sell signals that I'm waiting to confirm. So there's Apple, and let's just move on quickly to the rest. Here's Alphabet Class A. The both share classes GOOGL and GOOG. They look pretty much the same, especially on the intraday chart. So you have a pretty clean uptrend line. Notice how well defined this is so far. Reaction, and it's just crawling up that uptrend line. I don't have a MACD up here. If I did, you'd probably see a divergent high. I could easily put that up, but it doesn't matter. Look at this trend line. A break of that would obviously be your first sell signal, and then if look at this big volume at price histogram bar, that means the majority of the trades over the last several days from the span of this chart, this indicates that most of the trades have occurred at this area. So most of the buyers, the near-term buyers at this point are doing well. They're profitable. However, if we drop below this shaded box, below this volume at price histogram bar right here, they are underwater, the bulk of the sellers. So that would often or very likely trigger a pretty impulsive sell-off. And again, these levels I've already marked up are targets. So I could see a little reaction along the way, but that would be a drop all the way back down here, which to measure that out in Google or Alphabet, that's about a 1.36% drop. May not happen today, but if the market rolls over, certainly a target within the next day or two. GOG, there's the other share class, same chart really. Microsoft, I could draw an uptrend line here, but I won't. I'm looking at this reaction, this previous reaction high, some reaction lows here, so a couple reactions there. So that's a level I'm watching to see if Microsoft takes that out. And again, in conjunction with all these other leading stocks breaking support. There's a well-defined uptrend line on Amazon, and you have some pretty decent price support below. You can see the reaction here. You can see this long volume at price histogram bar. These also are useful to use when trying to line up your support and resistance lines. In other words, you can see it's pretty thin all the way until down here. You have a thin zone, I call it, where you didn't have a lot of trades occur. You can't tell just looking at the price action. Prices move through there, but that's what the volume at price histogram tells you, is there were much fewer trades in this range between here than there were down here and above here. In fact, quite a few, in this range right here where this long bar is. So we broke below that uptrend line, but the market's holding up because, as I showed you on the 60-minute charts, it's been dancing on support all day. So if they dump into the close today or follow through tomorrow, those are your support levels to watch and potential targets. All right, a couple more. Facebook. There's Facebook, pretty well-defined uptrend line again. Couple reaction, and now it's been holding just above that uptrend line. Has pretty nice horizontal support right here. So a break of that uptrend line would likely bring us down there. And again, this could lead to a lot more because remember, we're in a microscopic world here, the 1-minute charts, and the daily charts and everything going out longer is more bearish. So you can take these, use these intraday charts as just day trading ops. And you can also use them to micromanage your position or scale into swing trades. For example, on the 60-minute charts, we're at resistance and have been all day, so you could add short exposure there with a stop on a solid daily close above, or maybe even a 60 or 120-minute candlestick solid close above those resistance levels, which we haven't had yet. It's Facebook, couple more. Intel, pretty well-defined support level here around 37.73. You can see the reactions there, a little brief spike below it, but you also have this reaction high. And again, look at these volume at price histogram bars. You can see the bulk of the trading has occurred above this level. So All these trades, in fact, that's everything that's traded today. So all these traders are happy, at least in the near term, these short-term traders. If we break below that line that I just mentioned, that support level there at 37.73, then they are all underwater. There's a thin zone. You can see the volume price histogram bars, which would indicate a relatively swift drop down to that next support level and possibly beyond. Comcast, nice symmetrical triangle pattern, just broke down. Don't see much support until this level here, which is very solid support, 65.04, so we'll call that 65 to round off and give it a little room. And so that, again, it probably won't go all the way there if it most certainly won't if the market rallies from here, let's say into the close. However, should the market reverse as I expect either into the close or sometime tomorrow, then I can pretty much assure you there's a good shot. I haven't checked the stock for earnings. Earnings can always change the picture. Or, you can have a gap up or down if there's earnings, and I haven't looked at Comcast, but that would be a minimum target. And then more importantly, look how well defined this level is over the last few days. In fact, all the trades for the last several days, at least 2.5 days or whatever we're seeing on this chart, have occurred above that line. So that again, I have brief break below, but I have the support line or 65.04, we'll call it 66, so that would be pretty bearish. And then if you are, let's say, a swing trader, you take a look. If you're interested in maybe shorting a break over 65, check the 60-minute charts. Make sure there's not any support just below or anything else. So you can see it. You can see it there. There's actually some support down here. That's around 64.70, and then you go out to the daily charts. And you can see the bigger picture. Comcast, like the broad market, just broke down, and there's a pretty good support level. See, it's been dancing on. So these really coincide with those levels I was just looking at on the intraday charts. So that would be, I don't see support on the daily chart all the way until down about right here, 63.42-ish. All right, let's get back into our micro world of the 1-minute charts. Cisco, here's a gap to fill. So if you break below this level here, that 30.46, it'll probably backfill that gap and maybe then some. And we'll wrap up 2 more. Amgen, very clean symmetrical triangle. It's going to pop one way or the other. It has to soon. Doesn't mean it has to explode out of there, but it's going to come out of that point because now we're at the apex of the triangle pattern. So you have support here and support down here. I'm sorry, the pop-up box I realize is cutting off to the left of the screen recording software. That's 162.58. That's 162.87. And last one here, we'll wrap up. KHC, Kraft Heinz Company. Very nice support right here. You can see it just dancing above the gap. So there's a big gap to fill, which I'm sure you can see here. There's the gap to fill if that support level goes with conviction. Again, if it would help to have confirmation with the broad markets, and if it does, then that one drops down. You're looking at a drop of, try to measure it out for you, percentage terms, about 0.5%. Again, tiny trades for a swing trade if you're going to close out by the close, but if you take a day trade size position, and again, you can trade these stocks individually certainly, or you can trade SQQQ, the triple short ETF. You could trade the NQE mini futures, which have more leverage. If you're an options trader, you can do that, whatever you want. So those are some of the things I'm looking for, and let's see what happens now. There's less than an hour and a half to the close. Maybe we just limp and stay into the close here, but I'm keeping an eye out for selling. Let's see if we get some profit taking. They were able to ramp the market up today and ran right into resistance. If they can hold that level, it's hard. This is all noise. I don't want to say that's bullish, but it's more bullish than bearish if they can hold that, especially if they ramp it into the close it above that level. However, if they can't hold these gains and you see a big dump into the close by the end of the close, especially a gap backfill, that would be a pretty good move down. But that would be very bearish, telling me that the funds are dumping, the institutions aren't holding, that nobody wants to hold. They can't follow through on this gap up today. And that would more than likely convinced me to take some short exposure home, a little more short exposure than I have. But right now, like I said, today's really a do nothing, go nowhere day. We're still well in the midst of these big trading ranges. That's the bigger picture. Don't ever kind of lose sight. It's easy to get lost in those intraday charts, but the bottom line is for the last few months, 3 months now, really, we've been chopping around in nowhere but very, very large, I should say relatively tight sideways trading ranges. When you zoom out on the longer term charts, you see this is a relatively tight trading range, and we're smack in the middle of it right now. So, all right, guys, hope you enjoyed it. And again, if you're not a day trader, an active trader, disregard these intraday charts and don't even bother messing with them. This has been Randy Finney with the Right Side of the Chart.